Last time we discussed gold and silver, they were left for dead. They'd broken their charts. Katie barred the door to the downside. Our next guest is not so fast, boy chick. He's J.C. Parets, All-Star Charts. You think these things gave us a false breakdown? It faked, there's a little head fake, and people should be buying them back right now.
You know, there was a lot of interesting action last week during the holiday week. You've got, you know, a low volume week. A lot of people are out of town on vacation, taking advantage of the fact that kids are out of school. And we were making new lows in both gold and silver. And, you know, GLD, SLV, and slowly but surely, while no one was looking, slowly started creeping back, gapped up higher yesterday, first day of the year, like if the breakdown never occurred.
Yeah, so, but it went back. Gold, let's talk gold just because it's easier and kind of more grown up in the way it trades. 1,600 on gold itself, impedes to 160 or so on the GLD. That busted to the downside in a reasonable way. The gap up on Monday, or Tuesday rather, took us kind of right there again. Is it too soon to be calling this a fake out and start buying?
You know, I think it really depends on your time horizon. I think it depends on what your objectives are. Like myself, I look for nice risk-reward opportunities. When I see an area or a zone where shorts could get caught in the wrong direction, you know, those false moves create fast moves in the opposite direction. In this case, in the direction of the long-term underlying trend.
Does gold have a short base? I didn't hear many people shorting gold. We had a lot of longs, and they were kind of justifying this. Oh, it's Paulson selling, and the Chinese manipulating it, blah, blah, blah. But the sellers, it seemed, were more organic, and the shorts didn't start piling in. Do we have the makings of a short squeeze higher on the gold?
Well, generally, when you have a fixed low, in this case, let's call it 1550, 1575, whatever it is, you have a lot of people that put stop losses, you know, especially in these ETFs that a lot of retail investors are in. And in low volume weeks, you know, these stops get taken out. And here we are at the beginning of the year. And if you got stopped out, you're not in the trade. So you need to buy it back. That creates buying. But
then it also creates selling low, buying high, which is a huge trap, especially among the retail guys. It's, you know, can they be jumping in? It's hard mentally to be jumping in at 160 where you just sold at 155, is it not?
If you missed it, you have to chase it now if you want to be in the trade. And that's what creates these fast moves that come from false moves. We see it all the time. It's been happening for years. And if that's what you're looking to do and you're looking to trade and you're not a long-term investor, when you see these sort of false breakdowns, as far as I'm concerned, that's a great entry point because it's very minimal risk as long as you have...
Minimal, what's my stop?
If we take out that key lows again,
so 155, 155, 1500, 1550 or so.
That's why with proper risk management, there's very minimal risk. But if you're right, you're going to get a very quick move. And I think profits need to be taken. I think the volatility is here to stay. I don't think it's anything new. It's something we need to get used to.
If it's volatile, can we hang out for it? Is it too much with the huge movement that we saw, you know, yesterday? We've seen the huge movements in gold over the last month or so. Do you want to be buying the hardcore dips, or is it too late for that?
Well, remember, gold has been an uptrend for a long time.
Right, huge uptrend. I mean, multi-year, big.
It's great. It's not just on an absolute basis, but on a relative basis compared to equities. You saw gold this August make new lows relative, or new highs relative to the Dow Jones Industrial Average, right? We got below, what, 6 to 1
but the end
in the
of the year,
Dow to gold
roughly
ratio?
Even, did they not? I mean, it's your appreciation in gold and the Dow ended fairly close after the huge pullback. Can we look for that outperformance? Is that a reversal of the trend, or are we still hanging in there for outperformance versus stocks?
Well, we hit new lows at the end of the summer, so we know the trend is still there. And sure, you're going to get corrections. What are we now, 7.5 to 1 on a Dow to gold? We could see 8 to 1. We could see 10 to 1, which is a long-term average. But that doesn't change the secular bear market in stocks versus gold. I think that continues over the long run.
So we've handled gold. That's sort of Main Street of investing. Let's go to crazy town. Silver. That's just lunacy there. You say that we have the same formation going on there. Fake breakdown. This thing's rallying higher.
It's amazing. We literally saw the exact same thing. On Wednesday, that holiday week, you saw the breakdown. You saw a gap lower on Thursday in both gold and silver. You saw key reversal days on Thursday, rallying into Friday, and sure enough, gap first day of the year. So literally the exact same thing each day last week.
All right. Gold and silver, folks. I tried to talk him out of it. He had an answer for everything I threw at him. He's J.C. Parets. Why don't you check out his site, allstarcharts.com.